What's going on, everybody? Welcome to another edition of the Shed G and Friends podcast. Now, a lot of you know that I like to showcase and educate the community on things that, some people maybe not even know about, such as mortgage lending. Is that how you say it, brother?
Mortgage lending, yeah.
Yeah, okay, mortgage lending. And what better way to do it than to have one of my personal friends who I know is very knowledgeable about mortgage lending and how to educate the community for people who don't know anything about it. So, ladies and gentlemen, y'all make some noise now for the mortgage lender. I'm gonna just say John Muhammad. I think he's PrimeLending.
PrimeLending, yes, sir.
Okay, I'm clapping. I don't know why I'm the only one clapping, but I'm clapping for myself. Now, John, tell us about what you do and your company.
Got it. I am a loan officer and branch manager for a company called PrimeLending. We are a residential lender, and my specialty is working with everyday families who purchase homes or refinance homes, whether that be for the first time or multiple times. I work with investors. I can do a lot of things as long as it's related to residential lending.
Mm-hmm. Now, we're speaking of which, now I'm going to just get straight into it. Mm-hmm. What is the first step for someone who wants to purchase a house or whatever, or even just go through the process with the mortgage lending?
Yeah, the first step is to get pre-approved, is to talk to a lender. The thing that I don't advise people to do is to just run out and start looking at homes. Mm-hmm. Zillow would love for you to do that because they can put you in their marketing engine, but you really need to know where you stand. Do you have the income? Do you have the credit? Do you have the assets? Where's your debt ratio? What can you afford? So the best thing to do before getting your hopes up or maybe even looking for a house that may be overpriced or more than what you want to pay is to talk to someone like me.
And, and I'm guilty. I'm him. A lot of us don't understand the credit score that is needed. Mm-hmm. And the credit score, like in our mind, we feel like, man, you got to have at least a 750
yes.
or a 775 to get a home or even go through the process. What is the minimum?
The minimum score under FHA is 580. But
wait a minute. You talking about 580?
580, yes.
Okay.
Yes. But it's not all credit score, Shed.
Okay.
It's the factors that sort of go along with the credit score. So someone at a 580 credit score with a very high debt ratio and very little reserves, money post-closing, would have a difficult time getting a loan. But if you're at a 580 and you have someone that you're buying the house with that maybe is at a 700 score and you've got money in reserves, you got a 401k, it's factors. You and I know the movie Friday.
Yeah.
And he said, peanut, no butter.
Right.
Ham, no burger, right?
Right.
So it's not just score. There are other factors that can benefit you. Ideally, a person wants to be 620 or higher, but we can do loans at 580.
Hey, man, and that's good. Now, how important is to know, or how important is to get pre-approved? Like pre-approved, and how far can I take you? Because I'm not gonna lie, I'll tell you, I used to watch HGTV. Sometimes HGTV made me feel like I wasn't nothing.
Yeah.
Because, with the property brothers, they'll come on there. You got this man that's like with a family, with a wife and a child, and he like 30. And they said, well, what is your budget? He said, well, my budget is $720,000. I'm like, man, what have I been doing my whole life?
Right. Yeah.
So how important is a pre-approval?
Yeah, a pre-approval is paramount in the home buying process because you need to know what you qualify for and that you truly qualify for. The thing that I've learned over my 20-plus year career, Shed, is I never want to see people not realize their goal. So if I'm the type of lender that says, oh, Shed, you tell me you make $100,000 a year. You told me you got $50,000 in the bank. You told me your credit score was 800, and I just give you a letter. Mm-hmm. And then you go out, get under contract, and I can't close you because you really didn't have an 800. You had a 600. You really didn't have $100,000 income. You're self-employed. You had taxes at $40,000. So to get pre-qualified truly means that your income, your assets, your credit, and your debt to income ratio has all been verified.
Oh, that's pretty good. Now, what's the difference between, like, because there'll be so many terms that comes along.
Yeah.
What's the difference between a fixed rate and an adjustable rate?
Yes. So in the mid or early 2000s, we were really big on adjustable rate mortgages, and that helped with affordability at that time. So a fixed rate is, let's say it's a term such as a 30-year fix. That means your interest rate will never change over the entire 30 years that you have the mortgage. That's a fixed rate.
That's a fixed rate.
An adjustable rate is still a 30-year amortized loan, but it's going to be fixed for 5, 7, or 10 years. They even have some 1 year and 2 year. There's some lower than 5-year adjustable rates. It's not to say that it doesn't amortize over 30. It's just that you have that fixed rate amortized.
Ooh, somebody been reading.
Yes.
Somebody educated. You said amortize.
Amortized. And so you may choose to do a 5-year adjustable rate because you see yourself refinancing. See, the days of in our day, my grandmother is 93. She still lives in the very first house that her and my grandfather purchased. They've been there since the 50s. So she doesn't, like my mother, who is 71, 72, she's purchased 4 homes in her lifetime. I, at my age, have purchased, and I didn't give the exact number, but at my age, I've purchased 3 homes in my life. Right. So the idea that most people are going to live in a house for 30 years is not realistic. The average time that someone either is going to sell or refinance is 5 to 7 years. So if you're open to taking some risk to get a lower payment, maybe you go with a 5-year or a 7-year fixed rate so that you can either refinance it or sell the house before that term ends. But if you don't, the rates typically can only adjust up or down 1% each year.
So what is the biggest credit mistake that you see people do before applying?
Well, what I would say the biggest credit mistake that I see people making is not having enough credit. No credit is bad credit. Or you know, here's an example. You got a credit card with a $500 limit, but I don't use it. I don't want to. Right. That's not good. Right. If a bank is going to loan you $300,000, $500,000, they want to see how you pay. So you gotta use credit. Don't get credit and not use it. So it's having a diversity within your credit profile. That may be a car loan, which is an installment. Could be a credit card. Could be student loans. But you have to have diversity within that credit profile. Right.
Like credit is not Rent-A-Center. Credit is not Blockbuster Video.
It definitely is not. And it's and to your point, it's not short-term cover me until payday type loans. See, that is something that I see some people do, which is they'll go out and get $1,000 short-term loan thinking that because they've been told that that's going to help build their credit, and they keep doing that. It's not building your credit. It makes it seem like you can't handle your finances.
Well, how soon should somebody be preparing?
Your whole life.
Wait now.
Let me qualify that. Okay. What I mean, see, a person, if I just start a year out, and I'm trying to get to a 700 credit score, probably won't happen. 700 plus 800 credit is built over a lifetime, right? But if you're trying to get to, say, 620, or if you have bad credit and you're trying to build credit, that's a different story. But when I say it's built over a lifetime, just continue to establish good habits. Right. And the thing that I like to say is, when it comes to credit is, you have to understand that paying your bills on time is the most important thing that you can do, even if you can only pay the minimum. And so many people start getting behind, and then they let an account go bad, and then they start trying to fix it.
Try to play pickup.
Try to keep it good.
Now, can you purchase a home? So I see a lot of people, like you see the rich people that we call the rich people, president, filed for bankruptcy plenty of times. Can you still purchase a home with bankruptcy and foreclosures?
Yes, is the short answer. But there are particular types of loans that will allow that. So under the FHA guidelines, after 2 years of discharge, if you did a Chapter 7, you could buy a house. If you're in a Chapter 13 bankruptcy and your trustee says you can buy a home while you're in a 13, it can be done while you're in a 13. So the differences between a 7 and a 13 is Chapter 7 is you're basically saying, I can't pay anybody. I don't have nothing. And they just basically declare you as unable to pay. Whereas a 13, Chapter 13 is considered a wage earner's plan. I want to keep my car. I want to keep these assets that I have. And so they set you up on a payment plan. You can buy a house in a Chapter 13.
Now, this is like excellent. If you're just now tuning in, ladies and gentlemen, we are talking to a mortgage lender, the one himself, John Muhammad, who's a good golfer, by the way. We be out there playing a little golf and talking about situations like this. And the reason why I like doing episodes like this is to educate the community. So if you know somebody, if you even just tag people so that we can educate our people. That's one thing that we lack as far as like education and different things in our community. That's why a lot of families are starting from behind, where there's other ones who pretty much ahead. Now, what type of programs are out there? Because, we don't be knowing about
like some programs. We like
programs. Come on now. I want some programs. Tell me about some programs.
We like a program, but there are plenty of programs. I want to be honest with folks and say there is really no reward for being a first-time home buyer. And I know that sounds like something that we've been told, like, oh, I'm a first-time home buyer. I hear that so often. I'm a first-time home buyer. I'm a first-time home buyer. But there are a few loans that will favor you being a first-time home buyer, but guess what? You don't have to be a first-time home buyer to use the state-issued programs in Texas. So one of the programs in which actually was number 13 in the state out of 3,000 loan officers last year is a program called TSHAC, Texas State Affordable Housing Corporation. So if you're going to buy a home at $400,000, TSHAC will give you the money, the 3.5% or 5% that you need to make the down payment. Maybe not cover the closing costs, but you can get the down payment. But if you're working with a great realtor, they can negotiate closing costs. So I've been successful at helping people get into homes with very little money and at some points even getting money back. It's that good. But there's TSHAC, there's TDHCA. The city of Fort Worth has a program. The city of Dallas has a program. City of Arlington. All of these different municipalities around DFW have assistance programs.
Now, this is so good, man, and we're almost done. I really appreciate you taking the time out of your day. Like, if you was to talk to a first-time home buyer, somebody that's just now about to try to purchase their first home, what would be the advice you would give them?
I would say number one is a saying that I like to use. It says, character restoration must precede credit restoration. If you understand that you got to work on credit as a first-time home buyer, having that score at its highest potential, keeping credit cards under 30%, not having your credit pulled over and over. Don't co-sign for anyone for anything. I don't care how much you love them. Don't co-sign, because that's going to set you back. And if they make a late payment, now you've ruined everything that you work for. Save all of your money in the bank. Mattress money doesn't work.
Not more mattress. My grandfather, James Brown, buried in it, buried somewhere. Somebody can see
you might have a little money in a Jordan box, right? So no, put the money in the bank. I hear people say, well, I don't trust the banks. If the money system falls apart, it doesn't matter if you got paper or not. But our money is insured in the bank up to like $150,000.
Right.
You don't have over that, I wouldn't worry about it. Keep it in the bank, because all funds have to be verified. You have to have faith that this process can work. And as long as you have verifiable income, and you've been working at least 2 years consistently, don't even have to be in the same job. You don't have to be in the same line of work, but you have to have consistent, verifiable income. If you have those things, you're on the right track. But I'm here to help. All of the business that I get comes from people like you, realtors and referral sources. I'm not on the phone. I can take your call. I can have a conversation with you even when I'm on the golf course.
See, ladies and gentlemen, this is why I picked this guy to talk about that. Just do our conversation that is on the golf course and just the stuff that we have. Utilize your friends to have, if you have friends in business and everything and you talking to them, they're very knowledgeable, share that knowledge. And that's what I would like to do, man. Tell people how they can find you, look for you, or where they can contact you.
You can find me anywhere on social media at John the Loan Officer. My website is www.applywithjohn.com. I don't think we need to say the www no more.
No, who says
Apply
www?
with John? Yeah,
right.
www. It's showing my age.
My Instagram, my TikTok, my MySpace. Find me on MySpace, AOL.
Right. Let me give you, applywithjohn.com. You can find me there. I'm located in Grand Prairie. We're here in my office. I'm an in-office guy. I do not work from home. If anybody ever wants to set an appointment and come and talk face-to-face, I'm open to that. And if you'd love to meet me on the golf course, we can do that too. Right.
He the blue tees. He like to go way, way back there. But that's what we're going to do. Ladies and gentlemen, if you got anything out of this podcast, please make sure you tag, share, subscribe, and send to somebody who, you don't have to embarrass them. A lot of times we don't want to know, or just send it to them. Just, hey, man, I saw some good information. Maybe this may help you. Maybe when you're ready to go on your journey. So make sure you send it. Make sure you share the page. I've been your host, Shed G, man. John, thank you so much for coming.
Thank you.
Make some noise for John telling us all those big words and explaining the big words, man. Y'all see y'all later, man. It's your boy, Shed G. So if I put $500 down, when that going to do?